I'm Marcus, 29 years old, and everything changed when the bank manager looked at me across his mahogany desk and said, "People like you don't qualify for business loans. Maybe try a food truck instead of a real business." He slid my application back across the polished surface without even opening the folder that contained 3 years of meticulous planning, market research, and financial projections. The dismissal in his voice was so casual, so practiced, that I knew immediately this wasn't the first time he delivered this particular verdict. Before I continue this story, let me know where you're watching from in the comments. Hit that subscribe button and join me as I share how being denied became the fuel for everything that followed. I had walked into First National Bank that Tuesday morning wearing my only good suit, a navy blue one my mother had helped me pick out at Men's Warehouse 3 months earlier. She'd insisted on paying for it herself, working extra shifts at the hospital where she cleaned rooms for $12 an hour. "Mijo, you need to look successful before you can be successful," she'd said, smoothing the shoulders of the jacket as I tried it on. The suit was supposed to be my armor, my ticket into the world of legitimate business ownership. Instead, it felt like a costume that fooled no one. The appointment had been scheduled for 2 weeks. I'd called the bank's small business department after researching every lending institution within 50 miles of our neighborhood. First National had the best rates and the highest approval rating, according to the Small Business Administration website. I'd spent hours crafting the perfect pitch, practicing in front of my bathroom mirror, until I could recite my 5-year projections without looking at them. The business plan itself was 67 pages long, complete with demographic studies, competitive analysis, and conservative growth estimates that still showed significant profit potential within 18 months. My idea wasn't revolutionary, but it was solid. A commercial cleaning service targeting office buildings and medical facilities in the downtown corridor. I'd identified a gap in the market where most existing companies were either too small to handle large contracts or too expensive for mid-sized businesses. My background working maintenance at 3 different office complexes during college had taught me the industry's pain points. I knew which chemicals worked best on different surfaces, understood the liability insurance requirements, and had already secured preliminary agreements with 2 potential clients pending funding approval. The loan officer, Robert Hensley, according to the nameplate on his desk, was younger than I'd expected, maybe mid-30s, with prematurely gray hair and wire-rimmed glasses that he kept adjusting while he spoke. His office was designed to intimidate, with dark wood paneling and diplomas from schools I'd never heard of arranged precisely behind his chair. When I'd first sat down, he'd made small talk about the weather and asked if I'd found parking easily, the kind of practiced pleasantries that felt genuine until they suddenly weren't. "So, commercial cleaning," he'd said, finally acknowledging my presence after making me wait while he finished typing something on his computer. "That's a tough business. A lot of competition, thin margins." He hadn't asked about my experience or my target market. He hadn't inquired about the preliminary contracts I'd mentioned or the equipment I'd already researched. Instead, he'd glanced at the first page of my application, noted my address in Riverside Heights, and made his decision. "The thing is," Hensley continued, his tone shifting to something that might have been mistaken for helpfulness if you weren't paying attention to his eyes, "people in your situation usually do better with something smaller. Food service, maybe. Low overhead, cash business. Much more manageable than trying to compete with established cleaning companies that have been around for decades." I'd tried to explain about my industry experience, about the contracts I'd lined up, about the detailed financial projections that showed exactly how I planned to scale the business. But Hensley had already moved on, pulling up something on his computer screen and shaking his head as if confirming what he'd already known. "Credit's not terrible," he admitted, "but it's not what we typically see for commercial lending. Nothing personal, you understand, just business." The meeting lasted exactly 12 minutes. I knew because I'd checked my phone as security escorted me out of the building, my rejected application clutched in my sweating hand. That was the day I realized the system wasn't broken. It was working exactly as designed. The rejection at First National was just the beginning of what became a systematic destruction of everything I thought I understood about opportunity and merit. Over the next 6 weeks, I applied to 14 different banks across the metro area. Each visit a fresh lesson in how quickly hope can curdle into humiliation. The responses varied in their delivery, but never in their conclusion. Too risky, insufficient collateral, market oversaturation. Each loan officer had their preferred euphemism for what they were really saying, but the message was always the same. At Metro City Bank, the application process took 3 hours of paperwork before the manager, a woman in her 50s with perfectly arranged blonde hair, informed me that they preferred to work with established businesses rather than startups. "Perhaps you should gain more experience working for an existing company first," she suggested, as if my 5 years of maintenance experience and business degree somehow didn't count. At Community First, they requested additional documentation that kept changing every time I provided what they'd asked for. Tax returns became pay stubs, became character references, became proof of liquid assets I didn't have. The worst part wasn't the rejections themselves, but watching how the same institutions treated other applicants. During my third visit to Heritage Bank, I sat in the waiting area next to a young white man about my age who was discussing his food truck concept with obvious enthusiasm. The loan officer who emerged to greet him was all smiles and firm handshakes, ushering him into the same office where I'd been told food service was too volatile for their lending standards. Through the glass partition, I watched them laugh together over what appeared to be a very successful meeting. My fiancée Sarah started asking different questions after the 8th rejection. Instead of, "How did it go?" when I came home, she'd ask, "Are you sure this is realistic?" Or, "Maybe we should think about other options." Sarah worked as a nurse at the Children's Hospital and made decent money, enough to cover most of our rent on the small apartment we shared near the university. But she'd grown up in a family where business ownership meant inheriting something that already existed, not building it from scratch with borrowed money and determination. The conversations became increasingly strained. "Maybe they're right about starting smaller," she said one evening as I spread my business plan across our kitchen table for the 12th revision. "You could work for one of these cleaning companies, learn how they operate, build some connections." When I explained that I'd already done that the whole point was to avoid spending another decade making other people wealthy while my own opportunities slipped away, her expression shifted to something I'd never seen before: doubt, not in the business plan, but in me. 3 months into my rejection tour, I found myself at a small community development financial institution on the east side of town. The office was cramped and understaffed, nothing like the marble lobbies and mahogany furniture of the traditional banks. The loan officer, a tired-looking man named David Chen, actually read my business plan, all 67 pages. He asked detailed questions about my market analysis and nodded approvingly at my conservative growth projection. "This is solid work," he said, after an hour-long meeting that felt more like a business consultation than an interrogation. "Unfortunately, we're focused on retail businesses right now. Commercial cleaning falls outside our current lending priorities." But then he did something none of the other loan officers had done. He leaned forward and lowered his voice. "Can I give you some advice? Off the record?" When I nodded, he continued. "Robert Hensley at First National has been flagged by the State Banking Commission for discriminatory lending practices. Twice. Nothing ever came of it because proving intent is nearly impossible, but there's a pattern there. Don't take his rejection personally." That evening, I spent hours researching Hensley and First National Bank online. What I found was a trail of similar stories buried in local business forums and Better Business Bureau complaints. Small business owners with ethnic surnames describing identical experiences. Qualified applicants being steered toward food service regardless of their background or business concept. Loan applications that disappeared into bureaucratic limbo until the applicants gave up and went elsewhere. The studio apartment Sarah and I had moved into after college suddenly felt smaller each day. My rejection letters were stacked on our only desk next to past due notices for my student loans, which I'd deferred as long as possible while pursuing the business loan. The credit cards I'd used to fund my initial market research were approaching their limit. Most nights, dinner was ramen noodles with whatever vegetables would afford, while I calculated and recalculated how long our savings would last. But buried in my research about First National, I'd discovered something. Their commercial real estate division had been struggling, largely due to several high-profile defaults on downtown office buildings, the same buildings I'd planned to service my cleaning business, hemorrhaging money for the bank that had been so certain about their own stability while questioning. The irony wasn't lost on me, but it would be months before I understood just how useful that information would become. Sarah found me at 3 a.m. still awake at the kitchen table, surrounded by printouts and bank statements. "Marcus," she said gently, "maybe it's time to consider that they might be right. Maybe this isn't the right time." I looked up at her, standing in our tiny hallway in an old t-shirt, and realized that somewhere between the 14th rejection and this moment, she'd stopped believing in the dream we'd once shared. The betrayal of the banks. Losing my partner's faith felt like something else entirely. The garage behind my Uncle Roberto's house became my world for the next 8. It was cramped, poorly ventilated, and filled with the kind of discarded furniture that families accumulate over decades. It was free and it was mine. Roberto had offered it after watching me spiral through rejection after rejection, his weathered hands gesturing dismissively to explain why I couldn't accept charity. "Family helps family," he'd said in the mix of Spanish and English that marked all our conversation. "Besides, you'll pay me back when you're rich and famous." The transition from ambitious business owner to garage entrepreneur happened gradually, then all at once. Sarah had moved out 3 weeks after my research binge about First National, claiming she needed space to think, but leaving behind the engagement ring on our shared dresser. The studio apartment became unaffordable on my part-time income from the hardware store, where I'd taken a job stocking shelves and mixing paint. Roberto's garage meant I could focus every spare dollar on equipment instead of rent, every spare hour on building something instead of wallowing in what I'd lost. My former friends from college treated my new circumstances like a contagious disease. James, who'd landed a management trainee position at his father's accounting firm, started responding to my texts with increasing delays before stopping altogether. Monica, who'd always talked about supporting minority-owned businesses, suddenly became too busy to meet for coffee when I mentioned I was finally starting my cleaning service. The social circle that had once included me as an equal now viewed me as a cautionary tale, someone who'd aimed too high and landed exactly where people like me belonged. The cleaning business started with a single contract, Mrs. Chen's dental office in a strip mall 20 minutes from Roberto's house. She'd hired me not because of any impressive presentation or competitive bidding process, but because her previous cleaning service had stopped showing up without notice. $40 twice a week to clean 3 examination rooms, a small waiting area, and a bathroom that required hazmat-level attention to detail. It wasn't the commercial empire I'd envisioned, but it was revenue. I worked those early jobs with an intensity that bordered on obsession, treating each bathroom tile and window surface like it was being evaluated for a military inspection. Mrs. Chen's office gleamed. The small law firm I picked up a month later became the cleanest legal practice in the city. Word of mouth began to work in my favor. Slowly, one satisfied client recommending me to another business owner who needed reliable service at reasonable prices. By month 6, I had 11 regular clients and was working 7 days a week. The physical toll was immediate and constant. My hands developed permanent chemical burns from cleaning solutions despite gloves that I often couldn't afford to replace frequently enough. My back ached from hours spent crawling under desks and reaching into corners that building designers never intended humans to access. I lost 15 pounds in the first 3 months, not from any intentional diet, but from the simple math of burning more calories than I could afford to consume. But something unexpected began happening during those long nights spent mopping office floors and sanitizing break rooms. I started noticing things, patterns in how these businesses operated, what they spent money on, where they cut corners. The law firm that employed 6 attorneys was hemorrhaging cash on inefficient office supply contracts. The medical practice that seemed successful was actually 3 months behind on vendor payments. The insurance agency with the pristine lobby was operating with outdated computer systems that crashed twice a week. Most importantly, I began to understand how these businesses viewed relationships with service providers. To them, I was invisible, a necessity they preferred not to think about as long as their offices stayed clean. They discussed confidential matters in front of me as if I were furniture, left sensitive documents on desks while I worked around them, conducted phone conversations about deals and difficulties that revealed far more about their operations than they would ever intentionally share. One evening in November, while cleaning the offices of Meridian Investment Group, I overheard a conversation that would change everything. 2 partners were discussing their frustration with First National Bank, specifically how Robert Hensley had been pressuring them to accelerate repayment on a commercial loan that wasn't due for 18. "He's desperate," one said to the word is their commercial division is hemorrhaging money and they're calling in favors to improve their balance sheet before the quarterly review. I finished their conference precision. The bank that had rejected my loan app too risky was apparently struggling low problem. The institution that had positioned as fine early, a classic liquidity, that night in Roberto's garage industrial cleaning supplies and began researching First National's financial filing with a focus I hadn't felt since my original business. What I discovered was a pattern of poor decisions in their commercial real estate, over-leveraged positions in downtown properties that were lean tenants, and a quarterly loss report that painted a very different picture than the confident stability projected. The irony was perfect that had deemed the institute suggested I was struggling, what I was not yet, but for understanding exactly how the game people who'd convinced me I wasn't quite. Roberto found me at dawn, still hunched over financial documents and business journals, empty coffee cups scattered around my makeshift desk. "You look like you've seen a ghost, mijo," he said, concern evident in his voice. I looked up at him, this man who'd worked construction for 30 years and somehow understood more about business than half the loan officers who'd rejected me. "Not a ghost," I replied, gesturing at the papers that documented First National's slow financial decline. An opportunity. The breakthrough came 18 months after I'd started working from Roberto's garage, but it didn't feel like victory at first. It felt like drowning in opportunity. Meridian Investment Group, where I'd overheard that crucial conversation about First National's financial troubles, had recommended me to their property management company. Premier Holdings managed 17 office buildings across the downtown corridor, The same buildings I'd originally planned to service before Robert Hensley had deemed my ambitions unrealistic. The contract negotiation took place in a conference room that still smelled faintly of the industrial cleaner I'd used there dozens of times. David Morrison, Premier's facilities director, spread blueprints across the mahogany table and explained the scope. "We're talking about 1 million square feet of commercial space across multiple locations," he said, his tone businesslike but respectful. "Current provider has been unreliable. We need someone who can scale up quickly and maintain consistent quality standards." The numbers were staggering. $12,000 per month to start, with built-in escalation clauses that could push the annual contract value over $200,000 within 3 years. It was more money than I'd earned in my entire life, more than my parents had ever seen in a single year. But it also meant hiring employees, purchasing commercial-grade equipment, securing bonded insurance, and transforming my one-man operation into an actual company within 60 days. My first hire was Elena Rodriguez, a single mother who'd been laid off from a hotel housekeeping job when the property changed ownership. She had 15 years of experience and a work ethic that matched my own desperation. We met at a coffee shop near her apartment where she interviewed me as much as I interviewed her, asking pointed questions about my business plan and whether I had the capital to make payroll reliably. "I can't afford to work for someone who might not last," she said bluntly. "My kids eat every day, no matter what." Finding workers willing to take a chance on an unproven company led me into parts of the city I'd never explored during my college years or my comfortable suburban childhood. Labor halls where day workers gathered at dawn hoping for construction gigs, community centers where immigrant families sought resources and information about employment opportunities, churches where bulletin boards advertised everything from babysitting services to informal job networks that operated entirely in cash and handshake agreements. The workers I hired weren't looking for career advancement or benefits packages they'd never expect to receive anyway. They needed immediate income and flexible schedules that accommodated second jobs, childcare responsibilities, and family emergencies that middle-class employers rarely understood or accommodated. Maria cleaned offices from 6 p.m. to midnight, then worked the breakfast shift at a diner from 5 a.m. to 11 a.m. Carlos painted houses during the day and mopped bank lobbies at night, sending half his earnings to relatives in Guatemala who depended on his remittances for survival. Managing this workforce required skills that no business school curriculum had ever covered. I learned to schedule around court dates and immigration appointments, to advance partial payments when workers faced family emergencies, to navigate the complex web of documentation requirements that allowed people to work legally while living in constant fear of bureaucratic complication. These weren't the employee relations challenges discussed in management textbooks, but they were the daily reality of running a business that provided economic opportunity to people the formal economy had largely abandoned. The financial pressure of rapid scaling nearly destroyed everything before it began. Commercial cleaning equipment cost exponentially more than the household supplies I'd been using. A single industrial floor buffer cost more than I'd spent on equipment during my entire first year. Insurance requirements for large commercial contracts demanded coverage levels that pushed my monthly premiums higher than my rent had been. The 30-day payment terms that large companies considered standard meant floating payroll and expenses for weeks before receiving revenue. But the real challenge came from competitors who dismissed me as irrelevant when I was cleaning 3 offices and suddenly viewed me as a threat when I landed Premier Holdings. Anonymous complaints were filed with the city about my business license. Suspicious cars appeared outside Roberto's house at odd hours, photographing my equipment and vehicles. 2 of my employees reported being approached by representatives from established cleaning companies offering them immediate employment at higher wages, clearly attempting to sabotage my ability to fulfill the Premier contract. The attempt that nearly succeeded happened on a Friday night in March, 6 weeks into the Premier contract. I arrived at the Meridian building to discover that someone had contaminated my cleaning supplies with bleach, creating toxic fumes that forced an emergency evacuation and nearly resulted in hazmat team intervention. The building manager was furious, threatening to terminate our contract and pursue legal action for the incident. Only Elena's quick thinking and detailed documentation of our usual procedures convinced him that the contamination had been deliberate sabotage rather than negligence. That weekend, while dealing with the crisis and trying to salvage the contract that represented my company's entire future, I received a call that changed my perspective on everything that had been happening. David Chen, the loan officer from the Community Development Financial Institution who'd given me off-the-record advice about Robert Hensley, had been following my progress through mutual business contacts. "Congratulations on the Premier contract," he said. "Word is getting around about your success." But then his tone shifted to the same confidential whisper I remembered from our original meeting. "You should also know that Robert Hensley got promoted last month." He's now Senior Vice President of Commercial Lending at First National. Apparently, his superiors were impressed by his risk management record, specifically his low default rate on business loans. The irony was overwhelming. The man who'd refused to even consider my loan application was being rewarded for the conservative approach that had kept qualified borrowers like me from accessing capital. There's something else, Chen continued. First National's quarterly report comes out next week. From what I'm hearing through industry channels, their commercial real estate portfolio is in serious trouble. 3 major defaults this quarter alone, including 2 downtown office properties that are now sitting empty. He paused, letting the significance sink in. The same properties you're probably cleaning for Premier Holdings. That night, I sat in my new office space above Roberto's garage, surrounded by employee schedules and equipment maintenance logs, and began researching First National's financials with the same obsessive focus I'd once applied to my original business. But this time, I wasn't looking for a loan. I was looking for leverage. The expansion happened faster than I'd ever imagined possible, but not without casualties that still kept me awake some night. By the end of year 2, New Start Commercial Cleaning employed 43 people and serviced 67 buildings across 3 counties. The garage behind Roberto's house had been replaced by a warehouse facility with proper storage for equipment and chemicals, complete parking for our growing fleet of vans, and actual office space where Elena now managed daily operations while I focused on contracts and business success brought attention I hadn't or wanted. Local business journals started featuring my company in articles about minority entrepreneur development success. The mayor's off a fraud. They wanted to hear about the American dream, realize through hard work. I couldn't tell them about the threats or the growing sense success was making me enemies in places I'd never. The Premier Holdings contract had led to 3 additional property management companies, each bringing their own portfolios of office buildings, medical complexes, and retail spaces. Revenue was approaching $50,000 per month, numbers that should have felt like victory, but instead carried the constant pressure of payroll, insurance, equipment maintenance, and the dozens of small crises that could destroy everything if mismanaged. Elena's kids had health insurance. Our company. I hadn't taken a real vacation. My relationship with success was complicated. The people Sarah had married her nursing student months earlier, a man who owned a house in the suburbs and drove a had never been. She sent a wedding invitation to Roberto's address, a gesture that felt more closure. My college friends had stopped pretending to maintain contact, their LinkedIn posts about promotions and professional achievements serving as reminders of the conventional path I'd abandoned or been forced to leave. But the most painful loss was Maria, one of my first employees, who'd been hit by a drunk driver while walking to her second job after finishing a night shift at one of our downtown buildings. The accident left her with a permanent limp and medical bills that drained the small savings she'd accumulated working double shifts. Workers' compensation covered the incident, but bureaucratic delays meant months without income while her family struggled to make rent. The guilt of knowing her injury happened because she was working for me, walking those empty downtown streets at 2 a.m. because I needed someone reliable for the overnight shift, became a weight I carried daily. The financial success also revealed how precarious my position remained within the broader business community. Bank loans were still difficult to secure, despite 2 years of consistent revenue and growth. When I applied for a credit line to fund equipment purchases, most institutions required personal guarantees that would have cost me everything if a major contract was canceled. The same banks that eagerly courted established businesses with weaker financial performance treated me as if success could disappear overnight, as if my revenue was somehow less reliable than competitors who'd inherited their operation from previous. The breakthrough that changed everything came through Elena's cousin, who worked as a bookkeeper for a small investment, specializing in distressed real estate. During a family barbecue that I attended and as guest, the cousin mentioned that several downtown offices foreclosure. The owners had defaulted on loans from various banks, and the properties were being auctioned to recover whatever value remained. Severely depressed real estate. One building name on the list made me stop mid-conversation. The Meridian Tower, where I'd first overheard the conversation about First National's financial troubles, was facing foreclosure. The building where I'd spent countless nights mopping floors and emptying trash cans while executives discussed deals and strategies was hemorrhaging money so badly that the bank was preparing to seize it. Premier Holdings was already planning to relocate their offices because the building's financial instability was affecting their ability to maintain long-term leases. That evening, I spent hours researching commercial real estate foreclosure procedures and auction processes. What I discovered was an opportunity that felt almost too perfect to be real. Buildings in foreclosure often sold for fractions of their assessed value, especially in a depressed market where commercial lending had tightened dramatically. A building that might have been worth $3 million 5 years earlier could potentially be purchased for under $1 million at foreclosure auction, assuming someone had the capital and creditworthiness to secure financing. The idea was audacious beyond anything I'd previously considered. Instead of just cleaning buildings owned by other people, I could potentially own the buildings myself. Instead of being a service provider dependent on contracts that could be canceled with 30 days' notice, I could become a landlord, collecting rent from tenants who needed space regardless of who provided their cleaning services. The commercial cleaning business had taught me everything about how these buildings operated, what they cost to maintain, and which ones were actually profitable versus which ones just appeared successful from the outside. But pursuing building ownership required a level of capital and credit worthiness that my cleaning business hadn't yet achieved. Even with 2 years of successful operations, even with contracts worth hundreds of thousands of dollars annually, the bank still viewed me as a risk rather than an opportunity. The same institutions that had created the foreclosure crisis through poor lending decisions were now reluctant to lend to businesses that could potentially solve their commercial real estate problems. Elena found me working late one evening, surrounded by property assessment reports and loan application requirements, trying to calculate whether building ownership was realistic or just another impossible dream. "You're going to drive yourself crazy thinking in circles," she said, settling into the chair across from my desk with 2 cups of coffee. "What's the worst thing that happens if you try and fail?" When I started listing the financial risks and potential business disruption, she cut me off. "Those are problems with money. What's the worst thing that happens to you?" The question forced me to confront something I'd been avoiding. The worst thing wasn't losing money or having to rebuild the business. The worst thing was remaining forever dependent on other people's decisions about my economic future. The worst thing was cleaning buildings owned by people who'd inherited wealth while never having the opportunity to build generational wealth myself. The worst thing was accepting that some opportunities were simply not available to people like me, regardless of how successful my actual business performance proved to be. That night, I called David Chen at the Community Development Financial Institution and asked to schedule a meeting, not for a traditional business loan, but for something much more ambitious and much more dangerous. The acquisition process took 14 months of preparation, negotiation, and financial maneuvering that felt like conducting surgery while blindfolded. David Chen's Community Development Financial Institution became the cornerstone of a complex funding arrangement that involved 3 different lenders, 2 private investors, and a small business administration guarantee that required more documentation than my original business plan. Every week brought new requirements, additional forms, and meetings with lawyers whose hourly rates exceeded what I'd once earned in a month. The target wasn't the Meridian Tower, which had sold to a real estate investment trust before I could secure financing. Instead, Chen directed my attention to First National Bank itself. The institution that had rejected my original loan application was facing a crisis that made my early business struggles look trivial by comparison. Their commercial real estate portfolio had collapsed under the weight of bad decisions, over-leveraged properties, and a downtown market that had fundamentally shifted during the economic downturn. "They're not technically insolvent yet," Chen explained during one of our weekly strategy sessions, his voice carrying the careful precision of someone who understood both opportunity and risk. "But their shareholders are losing patience with management, and the federal regulators are asking increasingly pointed questions about their commercial lending practices. They need capital injection, or they need to sell before the situation gets worse." The investigation into First National's financial condition revealed problems that went far beyond simple market forces. Internal audits, which I obtained through business contacts who preferred to remain unnamed, showed a pattern of questionable lending decisions that coincidentally favored certain demographics while excluding others. Robert Hensley's promotion to senior vice president hadn't been based on sound risk management, but on his ability to reject loan applications that might have actually performed better than the commercial real estate deals that were now dragging the bank toward insolvency. My own business had grown to the point where acquiring a community bank wasn't completely unrealistic, but it required leveraging everything I'd built over 3 years. The cleaning service now generated over $1 million in annual revenue, employed 67 people across 4 counties, and maintained contracts with property management companies that controlled nearly 40% of the commercial real estate in our market area. Elena had been promoted to operations director, and we'd hired 2 additional managers to handle the administrative complexity of a business that operated 24 hours a day, 7 days a week. The personal cost of pursuing the acquisition was immediate and severe. Sarah's replacement, a woman named Jennifer, who'd seemed to understand my ambitions when we started dating, began asking increasingly pointed questions about work-life balance and financial priorities. "You have a successful business," she said, during what became our final conversation about the future. "Why risk everything to buy a failing bank? Why not just enjoy what you've already built?" Her inability to understand that ownership represented security rather than risk revealed a fundamental incompatibility that had been growing for months. The bidding process for First National was conducted through intermediaries and confidential negotiations that felt more like espionage than traditional business transactions. My primary competition came from three sources: a larger regional bank seeking to expand their market presence, a private equity firm specializing in distressed financial institutions, and a consortium of local investors who wanted to maintain community ownership. Each group had advantages I couldn't match through conventional metrics like existing capital or industry experience. But I had something they didn't: intimate knowledge of the local commercial real estate market derived from 3 years of servicing buildings that other potential buyers only knew from financial statements. I knew which properties were actually profitable versus which ones were propped up by creative accounting. I knew which tenants were reliable versus which ones were struggling to make rent. Most importantly, I knew that the commercial cleaning contracts tied to these buildings represented stable revenue streams that could support a restructured lending portfolio focused on realistic rather than speculative opportunities. The breakthrough came when Chen suggested a community development approach that positioned the acquisition as economic empowerment rather than simple business expansion. Instead of competing directly with larger bidders on financial terms, we crafted a proposal that emphasized local ownership, community reinvestment, and lending practices designed to support small businesses that traditional banks had historically excluded. The regulatory approval process, which often favored applications that demonstrated community benefit, became our competitive advantage rather than our weakness. The final negotiation took place in a conference room at the law firm that had been one of my earliest cleaning clients, a poetic detail that wasn't lost on me as I sat across from First National's board of directors. Robert Hensley was notably absent from the meeting, having been quietly reassigned to a position with reduced authority as the bank's problems became undeniable. The board members who'd once rubber-stamped his lending decisions now faced the consequences of systematic exclusion that had driven away qualified borrowers while approving risky projects. "Your proposal is unconventional," admitted Dr. Patricia Williams, the board chairwoman whose academic credentials hadn't prevented her from overseeing years of poor institutional decisions. "But conventional approaches have led us to this situation. Perhaps unconventional solutions are exactly what we need." The irony of her words echoed the conversation I'd had with Hensley 3 years earlier, when my unconventional background had been considered a liability rather than an asset. The acquisition announcement was scheduled for a Friday morning press conference at the Chamber of Commerce, with local media coverage that would transform a private business transaction into a public statement about economic opportunity and community development. Elena helped me practice answers to anticipated questions, though we both knew that no amount of preparation could address the emotional complexity of owning the institution that had once dismissed my ambitions as unrealistic. Thursday evening, I stood in the parking lot outside First National Bank, looking up at the building where my original dream had been crushed with casual indifference. In 18 hours, I would walk through those doors, not as a supplicant seeking approval, but as the new owner of an institution that would operate according to principles Robert Hensley had never understood. The scared young man who'd been escorted out by security was about to become the person who decided which dreams deserved funding and which ones were simply too risky to consider. But first, there was one conversation I needed to have. The meeting with Robert Hensley was scheduled for Monday morning, 3 days after the acquisition became public. I'd spent the weekend fielding congratulatory phone calls, media interviews, and messages from former classmates who suddenly remembered our friendship. But none of that mattered as much as the manila folder sitting on my desk containing a loan application that had been submitted the previous Friday, hours before news of the ownership change had broken. Hensley walked into my office at exactly 9 a.m., his posture still carrying the confidence of someone accustomed to being the person with power in every room. He'd aged noticeably in the 3 years since our original meeting, the premature gray hair now completely silver, the lines around his eyes deeper from stress that had apparently taken a physical toll. But his handshake was still firm, his suit still expensive, and his smile still practiced as he settled into the chair across from my desk. "Congratulations on the acquisition," he said, his tone professionally cordial but lacking any genuine warmth. "I have to admit, I never saw this coming when we first met." The casual reference to our original encounter felt deliberate, an attempt to establish some kind of shared history that positioned his rejection of my loan application as water under the bridge rather than the systematic discrimination it had actually represented. I opened the manila folder and spread his loan application across the desk between us, the same mahogany surface where he'd dismissed my dreams 3 years earlier. The irony was perfect in ways I'd fantasized about during my darkest moments, but the reality felt different than I'd expected. Less triumphant, more complicated. "Let's talk about your application," I said, keeping my voice neutral. "You're requesting a personal loan for home renovation?" Hensley's confidence flickered slightly as he registered that I was treating this as a legitimate business meeting, rather than an opportunity for either reconciliation or revenge. Yes, my wife and I are updating the kitchen and master bathroom. It's a significant investment, but it should increase the property value substantially. His explanation carried the same casual assumption of approval that had characterized his interaction with other applicants I'd observed. The expectation that people like him didn't get rejected for reasonable requests. The application revealed details about his financial situation that contextualized everything I'd experienced during our original meeting. Hensley earned a substantial salary, but his expenses were equally substantial. Private school tuition for 2 children, payments on a luxury vehicle, a mortgage on a house in an exclusive neighborhood that consumed nearly 40% of his monthly income. He was living paycheck to paycheck at an income level that would have solved every financial problem my family had ever faced. "Your debt-to-income ratio is concerning," I said, echoing language he'd probably used countless times to reject applicants whose situations were far more stable than his current position. 47% before adding this loan payment. That's well above our standard lending criteria. I watched his expression shift from confidence to confusion, to the first hint of panic as he realized this wasn't going to be the formality he'd expected. "But surely you understand that my position here, my track record with the bank, provides additional security," he said, leaning forward slightly. "I've been with First National for 8 years. My performance reviews have been exemplary." The desperation creeping into his voice was familiar, the same tone I'd heard from dozens of small business owners who'd been rejected by this institution under his leadership. I pulled out a second folder, this one containing documentation that Chen had helped me compile over the past 6 months. "Actually, your track record is exactly why this application is problematic," I said, spreading photocopies of complaints filed with the State Banking Commission, internal audit reports that had documented his discriminatory lending patterns, and correspondence with federal regulators who'd been investigating First National's compliance with fair lending practices. "Robert," I continued, using his first name for the first time, "your exemplary performance included rejecting 37% of loan applications from minority borrowers, while approving 68% of applications from white borrowers with comparable or worse financial profile. Your risk management strategy wasn't conservative. It was discriminatory." The color drained from his face as he realized that I hadn't just bought his employer. I'd inherited documentation of everything he'd done. The silence stretched between us for nearly a minute before he spoke again, his voice barely above a whisper. "What do you want from me?" The question carried multiple layers of meaning. Was I demanding a personal apology? Public acknowledgement of his past behavior? Some form of financial restitution for the opportunities he'd denied to countless applicants over the years? "I want you to understand something," I said, closing both folders and meeting his eyes directly. 3 years ago, you told me that people like me don't qualify for business loans. You suggested I try a food truck instead of a real business. You made that decision based on assumptions about who I was and what I was capable of, without ever examining the actual merits of my proposal. I paused, letting the words settle. "Today I'm making a decision about your loan application based on objective financial criteria, nothing else." The loan application I'd prepared for his signature contained terms that were technically fair but practically impossible, an interest rate that reflected his actual risk profile, rather than his perceived social standing, a repayment schedule that required him to demonstrate the same level of financial sacrifice that he'd expected from other applicants, collateral requirements that included personal guarantees against future assets. Everything was legal. Everything was justifiable, and everything would be extremely difficult for him to accept. "I can't agree to these terms," he said after reading through the document. "The interest rate alone would make the payments unmanageable." His protest carried the same incredulity that hundreds of minority applicants had probably felt when faced with similarly impossible conditions, the shock of discovering that the financial system wasn't designed to accommodate people in his situation. "Then perhaps you should consider starting smaller," I replied, repeating the exact words he'd used during our original meeting. "Maybe a home improvement project that doesn't require borrowed money. Something more manageable than trying to compete with people who already have the resources for major renovations." The parallel was deliberate and devastating, and we both knew it. But as I watched Hensley struggle with the reality of his situation, something unexpected happened. The satisfaction I'd anticipated feeling during this moment was replaced by something more complex. Not sympathy exactly, but recognition that perpetuating cycles of exclusion and humiliation wouldn't solve the problems that had created this situation in the first place. "Here's what I'm actually going to do," I said, pulling out a third document I'd prepared but hadn't been certain I would use. "First National Bank is going to approve your loan application at standard market rates with reasonable terms, but it comes with conditions." I slid the paper across the desk. You're going to work with our new community development division to review every loan application you've rejected over the past 5 years. You're going to help us identify qualified borrowers who were denied access to capital for non-financial reasons. And you're going to personally apologize to each one. Hensley stared at the document, reading through terms that offered him the loan he needed while requiring him to confront the consequences of his past decisions. This would take months, he said finally. Some of these people probably won't even want to hear from me. The practical challenges of making amends for systematic discrimination were evident in his voice. Then you'll have months to figure out how to do it right, I replied. The same way I had to figure out how to build a business after being told I wasn't qualified to try. I stood up, extending my hand for a handshake that would seal an agreement neither of us had anticipated when the meeting began. Consider it character building, Robert. Isn't that what you used to call it when things were difficult for other people? The handshake lasted exactly as long as professional courtesy required. No longer. As Hensley left my office with his approved loan documents and his community service assignment, I realized that revenge wasn't nearly as satisfying as justice. Humiliating him the way he'd humiliated others wouldn't change anything. But forcing him to understand the human cost of his decisions, requiring him to participate in repairing the damage he'd caused, that felt like something worthwhile. That evening, Elena found me in the office after everyone else had gone home, staring out the window at the downtown buildings we'd once cleaned and now partly owned. "How did it go with Hensley?" she asked, settling into her usual chair with 2 cups of coffee that had become our ritual for processing difficult days. "Different than I expected," I admitted. "I thought it would feel like winning. Instead, it just feels like the beginning of something else." I turned from the window to look at her, this woman who'd taken a chance on my impossible dream when it was still just a one-man operation in Roberto's garage. "We have a lot of work to do if we're going to run this bank the way it should have been run all along. Over the next 6 months, First National Bank's lending practices underwent a complete transformation. We approved 67 small business loans that had been rejected under previous management, provided financial education workshops in communities that had been systematically excluded from traditional banking services, and established partnerships with organizations that supported minority entrepreneurship. The bank's profitability improved not despite these changes, but because of them. Qualified borrowers who'd been turned away by discriminatory practices represented significant untapped market opportunity. Robert Hensley completed his community service assignment 4 months ahead of schedule, personally visiting every rejected applicant he could locate and facilitating new loan applications for those whose situations warranted reconsideration. Several of those borrowers became success stories that we featured in our quarterly reports to regulators and shareholders. The man who'd once embodied systematic exclusion became an unlikely advocate for inclusive lending practices, though his transformation felt more practical and philosophical. The story went viral when Business West magazine published a follow-up article about the acquisition, focusing on the poetic justice of a rejected loan applicant eventually owning the bank. But the real story wasn't about revenge or individual triumph. It was about what happened when institutions prioritized potential over prejudice, when lending decisions were based on business fundamentals rather than cultural assumption, when economic opportunity was distributed according to merit rather than social. Standing in the lobby of First National Bank on the 3-year anniversary of my original loan rejection, I watched Elena train our newest loan officer, a young Latina woman whose business degree and bilingual skills made her perfect for serving our increasingly diverse customer base. Small business owners lined up at her desk with the same hopes and fears I'd carried into this building years earlier, but now they were met with genuine evaluation rather than reflexive dismissal. The scared young man who'd been escorted out by security was gone, replaced by someone who understood that true success meant creating opportunities for others rather than simply accumulating wealth for himself. The family that had thrown me away couldn't have predicted that abandonment would lead to ownership, that their casual cruelty would become the foundation for systematic change. Sometimes the worst things that happen to us become the raw material for the best things we eventually build. But most importantly, I'd learned that power without purpose is just another form of emptiness. The real victory wasn't owning the bank that had once rejected me. It was transforming that bank into the institution it should have been all along, the kind of place where dreams were evaluated on their merit rather than dismissed based on assumptions about who deserved the chance to try.